Hello again, friends. Carlos Scarpero here, VA mortgage specialist with Epic Lending and Military Mortgage Bootcamp. Today, I want to talk a little bit about house hacking and what that means. You might have heard this term before. It's pretty common around the real estate community. It's a term called house hacking. Sounds so interesting and mysterious. So house hacking is where you use, twist the guidelines, or I guess take advantage, not really a twist, but take advantage of the guidelines to earn some rental income on your property. So with a VA loan, you are allowed to house hack. And so what that means is that you're allowed to buy up to 4 units and live in one while renting out the others for income. So a little bit about how this works. So like I said, on a VA mortgage loan, you are allowed to buy up to 4 units. You are allowed to rent out the other 3 and make some money from it, which is nice. It's still a zero down product, by the way, so that's really nice. You can start your rental portfolio with zero down. Be very, very careful though, because the VA mortgage loan is not meant to be an investment loan. It's not meant to be building a real estate portfolio. I know a lot of people are like, well, I'm going to say I'm owner occupied, move out in 2 months. No, you can't do that. And in fact, when you're going to sign a letter of intent saying intent to occupy, and if you try to go buy another 4 unit 3 doors down a month later, you're going to have some problems. So definitely do this if you're really intending on living in 1 unit and intending on staying there at least a year. Then it can be a great way to start your rental portfolio. So here's what you need to know. So you can, like I said, you can get up to 4 units. Ideally, if you have enough income to qualify for the mortgage payment on all 4, just on your base income, that's the cleanest and easiest way to do it from a qualification standpoint. But I understand that sometimes, maybe that debt ratio and that residual income is not working if you're getting all 4 units and you need a little extra boost. So they actually do allow you to use the rents from the other 3 units towards that income. There are some very, very specific guidelines for that. The first one is that you either need to show expertise in the field by showing tax. So there's a few ways to show expertise. So if you have rental experience before, if you've owned rental property before, and you can produce 2 years of tax returns, then that has shown expertise. Additionally, if you're a real estate agent or in the real estate industry and you can show that you know a lot about real estate, you know a lot about the law, then you can use that to show expertise. If you don't have that, you can also hire a property manager and say, hey, this property manager will be my advisor, and use that to establish the expertise. Now, that being said, lenders have their own overlays, which are guidelines on top of that for rental income. A lot of them I've noticed, even though there is a property manager provision in the guidelines that you can hire a property manager if you're not experienced, a lot of lenders will say, well, we don't care what the guidelines say. We're not going to do it unless you have tax returns proving that you have experience as a landlord. So keep that in mind. If you're working with me, I can certainly walk you through those guidelines. I have lenders that will take having a property manager as sufficient evidence of experience. But if you're not working with me, you need to definitely reach out to your loan officer and ask in advance how that works with whatever lender you're using. And be very, very clear. Here's my intention and here's my experience level. Is that going to be a problem? Can you ask the underwriter, is that going to be a problem? Because a lot of times we make assumptions and then talk to that underwriter and find out, whoops, that is a problem. So sorry, I went a little long on that one, but it's a very, very important point that you just have to make sure there's no guideline, no overlays on that. Next thing is you need some sort of evidence of the value of the leases. So if you have tenants already in there, if you have copies of lease agreements, then definitely bring those to the table, get your realtor to talk to the listing agent and get copies of leases. The VA also does allow opinions of value. So if there are some units that are vacant, you can get an appraiser to give an opinion on what it would rent for if it was rented out. And so that's a good way to do it as well. Also keep in mind, you can't use the entire value. It's actually only 75% of the rents that you can actually use towards income because they will factor in, there's going to be repairs that need to be made, or there's going to be months where somebody's not living there and that type of thing. And so they will, or I will factor that in. So you say, oh, there's $1,800 worth of rent coming into this 4-unit complex. Well, then what I'll do is I'll take 75% of that and count that as the income towards your qualification. Another thing to keep in mind is per VA guidelines, you need 6 months of reserves. So what reserves are is the money that's in your bank account, liquid in a checking, savings, IRA, 401k, et cetera. That is liquid that you can take out immediately if there's a situation arises. Because their concern with this is if you start being a landlord in the property, excuse me, and you have something happen, maybe major damage, you have a couple bad tenants, that type of thing, then they want to make sure that you can make those payments. So per VA guidelines, you need 6 months of reserves. And those reserves would be the principal, interest, taxes, and insurance that is in any sort of liquid account, like a checking, savings, et cetera, after closing, not before closing, but after the closing is completed. And that will need to be documented and sent to the loan officer. So that is a little bit about VA house hacking. It is a great way to start your rental portfolio. I know a lot of people that have never owned rental property like to use this as an entry point into becoming a real estate investor. As always, if you have any questions, feel free to reach out to me. My number is 937-572-3713 or scarpero.com. I am licensed in Ohio and several other states. Keep adding new ones all the time. And if you don't know anybody, or if you are buying a home in a place where I'm not licensed, I know loan officers all around the country that can help. Look forward to talking to you soon. Bye.